Hi everyone, good morning. Thanks for joining us here at Admiral Markets. My name is Chris and we're going to take a look at the Forex market just in a second. Before we do that though, we're going to take a look at this disclaimer. This webinar is intended for a global audience. It may not be suitable for everyone. To find out more about that, conditions and other details, take a look at admiralmarketsglobal.com, select your country of residence and contact an appropriate entity. Also, trading for exchange and other financial markets are considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer. So today's focus is going to be on moving averages, and we're going to use moving averages to understand the trend. It's very useful to do that. We can use moving averages to see if there are any trading opportunities as well. So we'll use the EMA bands. Anyone who is perhaps new in this webinar or joining maybe for the second time, please let me know, and I can give you a bit more feedback on how I use and which moving averages I use. Don't hesitate to ask. So the last days of May, we have CB, consumer confidence, and new home sales apparently on the US dollar. Let's see what those will generate. Yesterday was a quiet day because of the bank holidays in the US and England and Europe. So let's see how the market kind of warms up itself today. It certainly was slow yesterday, but today I'm sure will be a bit different. Markets are back open. This is the Eurodollar 1 hour chart, and let's kick off with our usual euro, looking at the 1 hour chart. So you see three bands of moving averages here in this case. I thought maybe today we can use those three. In this case, it's 34 EMA, but I mean 21 is just as is valuable. I use 21 nowadays more often, but 34 in this case, this template, 136 and 544. So basically on this 1 hour chart, we have the 34 band, we have the 136, which is basically like the 34 band of one time frame higher, like the 4 hour chart, and we have the daily chart 34 EMA band. Basically, we have three times, although the numbers of course are different, but basically we have the 1 hour, the 4 hour, the daily bands on this 1 hour chart. So you can see obviously price below all three of them at the moment. And there are two ways to trade it, either away from the moving averages or back to the moving averages. Away obviously is a trending trade. Back to the moving averages is a reversal setup. And you can see that Eurodollar had a reversal setup right in here and here. You're trading it from one set to another, potentially. I wouldn't trade it too keen on trading it if there's less than 50 pips or let's say between 50 and 100 is okay. Between 100, more than 100 is better. This was a gap of 55, so it's a bit on the tight side. This was a gap of 160, so this obviously is easier to trade. Now, I personally use moving averages only in context of looking at the entire kind of currency and using my discretionary knowledge. I think that's has the most value. But if a trader wants to use it very straightforward without too much analysis, then the idea behind trading it is, for instance, waiting for price to pull back to the moving average and break below it, and then take those breaks. So in this case, a break like here would be a loss, a break like here would be a profit, right? You preferably also have this moving averages a bit more aligned, perhaps. This is kind of overlapping, but that's okay because this is the very long-term moving average. These are three bands. I know that might seem very complicated. You can reduce the complexity easily by taking the very long-term moving average away, like this, and you just have two bands left. That's perhaps makes it a bit more visible visually. So you see that the Eurodollar, for instance, had a a long trade here, right there, maybe even here and here, if you literally take each one, but you can see that that might not be smart from a bigger perspective because of the resistance that is here. And here were kind of reversal trades. Now, taking every single setup definitely that breaks out when moving averages are aligned or that reverses is not good, because if you take a reversal here, it doesn't go out too far, does it? That's why personally I definitely use the try to analyze the whole currency to see if it makes sense. If I see a big resistance at 114.50, 114.50 here, I'm not going to take a long right above 114 right smack into the resistance. Personally not. So that saves me from taking those trades and only taking the good one here. Or taking here a good breakout when the moving averages are clearly aligned, right? Here you had a reversal trade. It did reach the target eventually here too, although slow. And here you had moving averages aligned. And you can see a breakout was here, a breakout was here, perhaps even one more. That's how you can trade using moving averages. So with that said, let's take a look at the daily chart. Last week was bearish week, and you can see that that happened after a very strong downside. All that downside, as you can see, happened below the 34, and everything was aligned here. So that was a very nice downtrend. Eurodollar retraced on the daily chart up to the 21, moved away from it again, made weakness, and then moved up to the 136 here. Now we're breaking again below the 21. So this could be, there are two scenarios in my opinion, obviously, is that this is a breakout or this is still perhaps a bigger correction. Personally, I'm leaning towards the second here. So from my perspective, also even if price does continue lower, there is a chance it will bounce first, retraces first before it moves indeed with the trend lower. So from that point of view, despite the bearish breakout perhaps here, I wouldn't be surprised to see a bounce at one point or another to the upside. But it doesn't mean that we couldn't see the price move lower before we get the bounce. So from a 4-hour point of view, you can see that the moving averages are kind of intertwined, but that the 21 band is breaking below the others here. From the 1 hour perspective, we already have actually the moving averages aligned, 30-minute to 50-minute too. So from that point of view, there was a good breakout trade, perhaps this morning. Earlier though, as you can see, somewhere around 109. When you look at this small triangle that we had on the 50-minute chart here, you can see a fall yesterday. No, that was a Friday, sorry. A small continuation yesterday. Triangle, and the break underneath the triangle was basically a setup that makes sense when you look at the moving averages. These moving averages aligned, these aligned, and when price then breaks below the support, you get a follow through. So that trade is up already more than 60 pips. And if you trail stop it, you could put it somewhere up above one. You could be up a few pips now if you use a trail stop. But I personally would be targeting 108.75. So from this point of view, there's no trade left when looking at moving averages. Unfortunately, that was a breakout trade on a 50-minute chart. That was it this morning. Otherwise, price has moved away from moving averages. What we preferably want to see is price move back to it and then break below the moving averages again. For instance, here you can see a fall, a correction, and a break below these fractals could have been a swing trade breakout. All those trades have already happened, so there's really nothing left on the table to discuss from a moving average point of view, except the daily perhaps. But personally, I wouldn't trade it here. I would rather wait for a bounce. And if I take a short, it would have to break at least this bottom. The future bottom that it doesn't exist at the moment. Anyhow. So that's it regarding moving averages in the Eurodollar. If you look, why 108.75? Just before we move on to take a look at other currencies, I think 108.75 is important because if you look at the weekly candle, strong candle, and if you put a fib on that candle, then the minus 272 target is 108.75. So typically a strong candle like that will see a bounce at the minus 272 target. That's one thing. Let's see, Björn is also mentioning the fact that the 61.8, and indeed, if you fib from here to here, there's a 61.8 fib as well. If it does break through 108.75, which definitely can happen, we know that support and resistance levels can break, and these are, I mean, there's confluence here, but it doesn't mean it's impossible. I would definitely think that 108.75 is a decent bouncing spot because of these two Fibonacci levels. But if it does break, if price does push through with a good 4-hour candle below 108.75, then we could be looking at 107.50. 107.50 is a quarter level, so psychological level, and a 78.6 fib. And perhaps, let me check. And the minus 61.8 as well is close by, 107.20. So 107.20, 107.50 would be the next target after that, which means that anything around 108.75 could be bounce potential. Anything below it could be bearish down to that target. So how do we know which one it is? I'll keep an eye on the 4-hour chart here. Personally, I think that's the best. Take a look at this 4-hour candle and the next few. I want to see how these candles interact with this zone and how price reacts to it. If we do get a bullish candle here engulfing twins, for instance, that would be interesting for longs. Or if we get a wick, that would be interesting for longs. If you get a strong candle close, if a candle like this closes with a big bearish candle, I would not take a long, obviously. And especially if you get a small candle again and a small candle again, I would look for the break below those lows for downside. In that case, we'll probably see some kind of smaller triangle on a 50-minute chart. So if we get a good bounce up, a good impulse, great. If price actually goes here and goes sideways and then starts to break below that triangle, it could be shorting territory. So let's see how price reacts here today. Alrighty, let's take a look at the pound USD. And let's put on the moving averages. I know that this might scare some of you, but in a way it has, I think it looks interesting. I mean, in a sense, how do I say it? It fascinates me how price responds to these moving averages. That's probably better formulated. And I find it a useful tool for trading too. But as I said, I use it at times that I want to. I don't use it as a standalone strategy, but it's certainly usable as that. But you gotta be critical with the spots you choose, right? Because if there is divergence, for instance, then taking this breakout here is not so good. Or there was no breakout, okay, actually. But if there were, it would not be good. In this case, it would have still been maybe a doable setup, but as you can see, obviously this would have been a loss if you take a long in here. Personally, I had my doubts about going long because of the other concepts, but okay. Point is that using moving averages are useful. You can find good spots, but if you use filters that take away some of these bad setups, it will be very useful. For instance, this was a good short here, right below the moving averages. This one not that much, but if you use the stop loss above here, it still would have worked out. All right, just give you some examples. Here, good breakout. Here, good breakout, etc. Anyhow, the pound dollar retraced. This is a whole mess on the weekly chart. You can see that there is really no trend on the weekly chart when the moving averages are, this bunched up, and when price is trying to break, but then it goes like this. What do we have? It's kind of like, as I call it, or and others as well, a heartbeat, right? When price has flat moving averages like this, and price kind of stays around it, and when it does break away from it, it goes back to it. You have kind of this vibe that I just show you with the colors here, and there's not much of a trend. So with the pound dollar max, we can say that price hit the 50 fib perhaps, and it could be a resistance spot for downside. But otherwise, moving average is not really helping us much. Daily chart, we had the same as the Eurodollar, basically. I moved back to the 34, I moved back to the 136 or 144. Both are equally valid, and then up to the 544. We filled up, basically we closed those gaps between those moving averages. Whereas here we had trades below the moving averages, and here we also had closed the gap trades. See that? So the blue are basically retracement reversal trades. The red here is with the trend setups. That's clear, right? So what do we have now? At the moment, on the daily chart, nothing yet, actually, because they're not aligned. Price filled those gaps. So either we have two potentials here. Either price will bounce off these moving averages and continue like this, or we will break below it. So these moving averages are kind of a break or bounce spot, in a way, from a moving average point of view. We will need price to break below 152.50 really before we have that breakout trade to the downside. From a 4-hour point of view, you can see close the gap, close the gap, close the gap with the trend setup, close the gap setups here. So there is a small close the gap setup here. How many pips difference is it? About 75, 80. Okay-ish, not great. Also, I don't like using the very long-term moving averages that much for that particular trade. I like the intermediate more, but it's still doable. Right here, a small gap to fill for downside. If I just add quickly a fib from here to here, we can see where the targets are. The target is right smack in the middle. So I would still be careful of 153.50 and then 152.50. Alrighty. Hourly chart, we just completed a reversal trade here. As you can see, we just reached the target, so there's nothing to be done there. Let's take a look at 50-minute chart. 50-minute chart, you can see here the moving averages are aligned, and any push below these fractals, for instance, or any close below the short-term moving average at 34 could be a setup. Not every one necessarily. You don't want to add too much risk in one same spot or same price level. But this one, for instance, here. Oh, is one of those potentials yesterday or earlier this morning. More in the Asian session, in fact. Or even this hook back. So same like the Eurodollar. The breakout trade on the lower time frame has happened. And the reversal trade on the hourly 4-hour has happened. And the daily, we potentially in a bouncing spot. The only reversal trade left is this one here. Alrighty, this is the 5-minute chart. And you can see that last week I was talking about letting this ride down and letting it correct on the 5-minute, letting the momentum fade out, finish, then looking for a pullback of the escalator to zero line. When you do that, and then take the next break basically, somewhere in here, then you can see that's a good setup. So for the moment, I'm not a particular fan of taking any trade at the moment. Maybe letting this 4-hour candle close and seeing how this ends up. If it closes bearish like this, small retracement about halfway that candle to 154.20, stop loss above the high, and a target at 153.50. I think it's okay. It's about a 70 pip versus a 30 risk. But only if the candle closes bearish. That's the only setup I see at the moment. And that short would try to fill basically part of this gap. You cannot automatically assume that the entire gap will be filled in one shot. As you can see here, this gap was closed right away. This gap was partly closed, but fully closed only here. That could happen here too. But we have bearish momentum. We have a lower high here, so we can even consider it a downtrend on the 4-hour chart. And we have some space till we bump into some support. So from that point of view, intraday shorts down to 153.50 makes sense. Then what will price do at 153.50, 152.50 is very interesting from the daily point of view, because then this could be still a very interesting bounce or break spot. And other than that, I don't see anything that is worth discussing because of the fact that the breakout trades on the lower time frames have already occurred, right? So we're always looking for trades away from moving averages or back to moving averages. And if price has already done that, then those trades are gone, right? Nothing we can do about it. So yeah, basically, indeed, to summarize, let this 4-hour candle close bearish. If there's more than half a wick, then I wouldn't take it. If it closes bearish, I would look for a pullback to about 154.20. Might not get there, but if we're lucky, it will make a decent retracement back to 154.20. That would be about, if we look at the 50-minute chart, that would be basically fibbing this. 154.20 is about the halfway mark here, 50 fib. 154.25 with a stop loss above this top. So basically, I mean, from this point of view, from a 50-minute point of view, it's basically a classical pullback, break, pullback, continuation. Now, the reason, so with the stop loss here, entry 154.20, 154.25, around here, and the target 153.50, which is the minus 6D1.8 as well. Now, the reason why I say take a look at the 4-hour chart candle is because what I want to avoid is, I don't think it will happen in this case because of the pretty strong momentum that we're seeing here with the oscillator. But what I want to kind of avoid is the fact that sometimes it can happen if you get break after break like this. You know, eventually we're not going to get any more breaks. Eventually, the momentum kind of dies down, exhausts, and you see a relief rally like this. You see maybe a correction like that, and you see something like this. Obviously, that short will be, a loss because the downside just overextended, and we see a rally to the upside. So that's something that if we can avoid, it would be pleasant to avoid. So looking at the 4-hour chart could give an indication if there's any weakness of the downside. Are bears still basically in control or not? We can try to read that from the 4-hour candle. If not, then something like this could happen. If yes, then probably this will not happen. Gives us a slight edge, I think, about avoiding taking shorts at maybe the last part of that downside. That can always happen. We can't avoid, these things to the 100%, obviously, but we can try to pick the ones that have the most chance. Obviously, if we look at the 5-minute chart yet again at 15, and we see there's no divergence as yet. So if we see some kind of triangle or bear flag like that hitting the 50 fib, that's a good sign as well, because then there shows that there's no impulse. If it does something like that, it's not a good sign. If it does something like slower, that's good. And if it touches the 50 fib, could be a good one. Or if it makes a bear flag indeed and breaks the bottom of that bear flag, could be a 5-minute breakout trade, stuff like that, like we discussed last week. Those things, of course, are left. Taking it right here, I think this bit is kind of chasing the market, because in the sense that we already had a fall here and we had a fall here, and obviously trader could look like at that price action and think, oh, I wish I was in that, and decide to take a short now, which I personally don't think is optimal. I mean, don't say it would not necessarily work out, but it doesn't seem like the biggest edge I think you can imagine. Here, I would rather be a bit more patient. I'm not expecting the downtrend at the moment to end here. No. For me to be bullish again, a lot of things would have to happen. The price would have to, I think looking at this, downside is more likely to 153.50, 152.50. That's this zone here. Jen, you were asking about that zone. That's this zone here from basically moving average point of view. 152.50, right, is the bottom. 153.50 is kind of the halfway. Perhaps even a gap is filled here, right? Perhaps even a fib could be used. Anyhow, there could be tons of things that might support and give confidence there around that area. Plus targets like this. So that's going to be interesting how price responds to that. 152.50, 153.50. For the moment, though, I'm bearish and would only be bullish probably, I can tell you tomorrow, because I would want to see something like a rally and a bull flag probably, and then the break. So not something that will happen soon. The downtrend could end, if you look at, Jen is asking when it could end. At the moment, it seems like we're set on the daily chart. It looks like we're rallying back. You can see we had a pretty strong oscillator here. But now look at the red bars here, going back to the zero line, right? So typically what I would expect is that we get close to the zero line, or maybe even below it or right at it. So we might have some few days left, and then depending on how price reacts in this zone, it could curve up again, and we could see something like this perhaps. And then this slowly growing again up. So when we have 3 green bars on the daily chart again, then that could be the signal for upside. Now, last week we talked quickly, and then we'll move on. I don't want to hang on too long here. Last week we talked about a long when we had 3 green bars on the 4-hour chart, right? That meant a long right in here, which was good because even if this were to happen, right, we still have part of that. Or the other scenario was that this could happen. Either way, taking a long here was okay because you still had some potential left. The problem was that I mentioned 157.25, so it didn't get up there. Unfortunately, it was Friday reversed. I did say move the stop loss to lock in below here because just in case, because you never know if the triangle doesn't break up or down. So at least in that case, some of that profit was still locked in. That was good, and we got a pretty strong momentum to the downside, which indeed meant that we are now in this downside. If we would have had a bull flag and broke that bull flag, then upside was more likely. But we got the momentum to the downside. So that's how that played out. Anyhow, let's move over to some other pairs. Yeah, it's struggling here a bit, I agree. Still on the early side, but way past L5 already. Past daily S2. So yeah, it has moved a lot. That's when you look at the pivot points, definitely one more reason to be cautious about shorts because we're already in quite far territory. Plus the Eurodollar could bounce at the 61.8. So we're at a kind of like a tricky point, right? Where okay, we have this downtrend, but we're reaching levels that should be important, and we have to monitor carefully. And if the Eurodollar does get the bounce, a strong engulfing twin, for instance, Jen, or rejection, I would be looking for potential long on the Eurodollar, more so than the pound because of the fact that I see pound still need to make some more push down, I think, before getting into a bigger bounce spot. Maybe here a smaller bounce, as Moses says. But then I would expect continuation depending on how this 4-hour candle closes. That would also include the news event that's coming up. Alrighty, Euro Yen. Let's see. Thursday we're talking about it that this was a triangle or bear flag. Someone mentioned in the educational webinar, and let's see. We got the break to the downside. Eventually, indeed. Let's put the moving averages on. Moving averages all intertwined and flat. As you can see, this is a classical situation where everything is just yuck on all time frames. This is easy, a pair that we can skip because there's so much sideways movement. Already. Pound yen is different because look at these moving averages, right? Nice big gaps between them. Price pulling away the moving averages from each other. So definitely a big difference. Daily chart too. Pound yen is a lot of action going on, and you can see pull back to the 34, giving reason for another bounce here on the pound yen to the upside. And a recent retest of this 34 at 175. It was a very serious retest, but eventually didn't break. So at this moment, there seems to be, when you look at the daily chart, weekly chart, they're in a bullish mode. And we can see that a candle close right here. Oh. A decent candle close above the 34 band here, then that could be a trade, just like this one was, for instance. Here was a candle close, or here was a candle close above that band. That could be a with the trend setup, or here as well. Here we didn't have closes. He had a close to the downside. So similar breakout trades would be left on this 4-hour chart after this 4-hour candle closes, with a stop loss below the bottom or below the candle. And a target, let me take a look. Targets, I like to use Fibonacci levels. Right, 618 pretty close at 190.40. That would have to be the target for the moment because of the that big target. Yeah, so basically, it sounds funny, but in this case, actually the pound has potential strength against the yen. Probably yen weakness. We can take a look at the dollar yen, but depending on how this 4-hour candle closes, it could be a break, pullback, continuation when fibbing this 4-hour candle. Break, pullback, continuation. So the pound yen looks interesting. The euro yen doesn't. Let's take a look at the dollar yen quickly. Dollar yen has one problem though at the moment. It's right at resistance. It was good breakout trades. I must have missed it by accident. Here. Good breakout trades. We talked about it that this could finish the triangle here or here and then move up strongly. And well, basically the breakout happened, the bounce happened exactly as expected, so that was good. And had some challenge. Was facing a challenge of this this level, so you saw a bit of a pause. But this morning the break, or just an hour ago, the break happened when we were starting our session, and now hitting 122.50. So at this moment, I don't see any trade set up at this particular time because we had the bounce here, we had a breakout here, perhaps even a setup here when price hooked back to the 38.2 fib. Right here. But now, all those bounces and breaks have happened. Personally, the one I see left is a hook back to 122, perhaps this broken resistance here. that's something that could happen. Let's take a look at the moving averages. You can see that price is above all of these daily ones, the weekly ones too, etc., etc. I don't want to bore you with exact detailed descriptions of every moving average, but just quickly, this is a wonderful example, obviously, of where moving averages are aligned very strongly on all time frames, daily, weekly, 4-hour as well. Great breakout trades on the dollar yen from a moving average point of view, and now the hourly. The hourly happened in the Asia session and earlier. So is there any setup at the moment? When you're looking at the moving averages, we've basically had all our breakouts. Right, that's the problem. And price has already accelerated away from the moving average. So I don't see anything else. The only thing we could trade is a move back to the moving averages. It's possible, but not something I want to do now. Because when you trade back to the moving averages, you need to see proof kind of the fact that there's exhaustion, that there's a reversal potential, that there's a retracement potential. I don't see that with the pound dollar yen, because if you look at the oscillator, it's towering and it's no divergence at all. So at the moment, you want to see divergence and you want to see some space between these gaps. All right, so can't trade back to the moving averages. Perhaps on a minute chart. I don't know. Let me take a look. Maybe there's 1 minute divergence, but then again, here we're never going to find 50 to 100 pip space. So, which means that it's more riskier, right? We got 1 minute divergence. We do. Scalpers might be looking to trade it from this gap down to this gap, but we're talking about 23 pips, which is in my book too little, but I think it's too risky because it could dip halfway, then move up again, and then do something like that perhaps, and then bounce up again, right? But the principle is kind of the same. Well, it is the same. The idea behind it is the same. It's just that practically speaking, it's not something I would be really jumping for joy to do because of the fact that you have just more risk involved. The spread is a higher part of the number of pips that are obtainable for profit, and it's a risky trade against the overall uptrend. And the only thing we have is a 1 minute divergence. So, I think you understand the risk that a close the gap trade would be on a 1 minute chart when all the other time frames are an uptrend. But in theory, this is the idea that if you have divergence, you could trade. There is a potential to trade and close that gap. But the more divergence, the better. The more divergences on various time frames, the better. This is a single divergence on the lowest time frame, which ultimately is very little, right? Just to put it in perspective. And therefore, in my opinion, not tradable. The parameters of these moving averages, there are 3 bands basically. So you got the close, high, and low. And you got 34 in this case, but 21 is just as good. I use 21 more, but in this template it's still 34. 136 or 144. And here's 544. What basically these numbers represent are kind of like the 34 EMA bands of one time frame higher. So on this time frame, we have the 1 minute, the 5 minute, let's say, and I guess the 20 minute doesn't really exist. Let's say the 15 minute, 34 EMA bands on this chart. Alrighty, let's see. Modris is up 20 pips in the meantime, taking a long from the area that he expected rejection. Great stuff. Good job. Let's see. Modris is also asking if he thinks that 1 hour is the best, and what I think. I think 1 hour is good. I think 4 hour is probably my favorite though. But 1 hour, I think sometimes you have a bit more the tendency that if you have a single divergence, you can still get a double one with 1 hour. I think 4 hour that can happen a bit less. That's why maybe I like 4 hour a bit more. But I think both are very good. So indeed, one is 34, the second is 136, and then 544. Anyone who would like to get this moving average indicator, because it is maybe, I like it because of the fact that it shows the angle via the colors, you can send me an email and I'll send it to you. There's my email. Alrighty. We can take a look at Modris's long via this lower time frame kind of viewing point. And you can see basically we had it's very strong on the 1 minute chart. I know it sounds funny, but not necessarily something I recommend, just for informational purposes, for fun, quickly. You can see a breakout trade, price moving, staying below the moving average, pullback, no divergence, so we get the continuation. Here we get divergence, and we have the close the gap, and here probably second close the gap. That's the idea behind it, basically. Now, the first close the gap is difficult. The only way to trade it is via a candlestick pattern at let's say here, but it's a clear reversal trade, obviously. All right, the second close the gap would be when you break above the first moving average, either the first time or the second time, or bounce off the bottom. And the same for between the second and third. Practically speaking, right? Theory, we have three opportunities. Practically speaking, I like personally the second or the third, not so much the first one. All right, let's continue and take a look at some others. Let me quickly take a look at the strong versus weak. Dollar moving down a bit, euro up, getting a bit of a bounce. Obviously, dollar was strong. This is the Aussie, I believe. So perhaps time to take a look at the Aussie and its weakness. Maybe against something like the Swiss franc, for instance, is rising here. We can see the dollar perhaps. So let's take a bit of a look at the Aussie. If you want to change the moving averages, by the way, you just right-click on the moving average, click on properties, and then you can go to colors here and change it. All right. It's possible that we could see a pause within that downtrend on the pound, and perhaps later on a continuation. It's definitely possible. All right, euro odd, or let me start with the pound odd here. Sorry, pound odd. We were looking at a potential breakout last week to the upside. That did eventually happen. We got a break, pullback, continue, and now making kind of a bull flag pattern. So we are getting the higher highs and higher lows, a push out of this triangle clearly now. We already had an initial push last week, we said, right? Pullback, but this is kind of the continuation and second breakout. So from that point of view, with the trend setups are up to the upside. Let's put on the moving averages. You see moving averages are aligned to the upside on the 4-hour chart, daily too. Weekly, only the long term is missing, but this is a weekly chart, so that will take long. Hourly, yes. And we actually had a recent retracement back to the moving averages. You see that? You had a retracement here back to the moving average. So if we get engulfing twins like this, I would think that that is a potential long. The other way would be to wait for 3 green bars again here on the oscillator, or zoom into the hourly, and or even lower 15 or 30-minute chart. And the same like the pound yen, basically wait for pullback. This is a break, pullback, continue. Typically, when you have so much momentum pushing price out of the moving averages, pushing them kind of like through them, kind of piercing through those moving averages, often because this is the first kind of punch, you will get a retracement, and typically you will get a follow through them if the momentum is strong. Most times it does. Especially if you get kind of a bull flag like this. So what I do typically then is put a fib from here to here and look for bounces at this level. I think the pound yen and pound out both have a similar setup like that. Keeping an eye on this 1-hour chart maybe, or even 4-hour candle, how this 4-hour candle closes, or how this 1-hour candle closes could give us a bit of indication whether this is indeed a zigzag like that, perhaps. All right, so that looks interesting, like the pound yen. Euro odd, less interesting. Again, just like the euro yen, did break through this triangle eventually. We had 2 lines last week, this one and this one. Eventually did break to the upside, but slow and corrective, not so good. Obviously, that means that price is not moving up with a lot of momentum, and eventually was making this bear flag. So in that case, we can readjust the analysis and say, okay, this is a momentum, this is a bear flag, we got the break. But so far, it hasn't gone down too much. It does have some space left, but price action is bullish at the moment, doesn't look too interesting for me. Now, tying these multiple time frames together can sometimes be a bit tricky. Like, for instance, here, we see price very far from the moving averages all aligned to the upside. So on the daily chart, you might think, oh, that's a close the gap trade. Their moving averages are below me. But just because the moving averages are lower than me, lower than price, doesn't mean that there's automatic close the gap trade. We have to really be aware that there is a higher risk involved with those trades, and you got to be a bit more demanding and want to have divergence, for instance, plus some candlestick patterns before you trade it back to the 34 EMA, especially back to the 34 EMA, because that's the very first reversal setup. So no, just because price is above it doesn't mean we can trade back to it, in my opinion. And there is no divergence. Okay, there is some retracement here, perhaps, but that's all. 4-hour chart, no divergence either. A slight divergence actually here. That could indicate a potential to move back to this medium moving average, by the way. Let's see what the difference is here between. There's a pretty good gap here. So if price does break below here with the pound is in below 211, we could see some downside potential. Below 211, we have space down to 21, then to 209. And after that, we'll have to see. Maybe eventually all the way to a 750, but let's see. But for the moment, we're not breaking this 211, and we're bouncing up. So this is a break. This is a break spot. Sorry, and we would need to break above to 1225, pull back, and continue for upside. So pound yen, pound odd look better for upside. Of course, there is a news event in just a second, so be careful of that. The pound Swiss, if you looked at the analysis part of the website on Admiral Markets today, showed the pound Swiss in a rising wedge, and that looks indeed very true. Good analysis indeed to me. Same thing, I totally agree. It looks like a rising wedge. Not so interesting here for the moment. I wouldn't be looking at the pound Swiss. Euro pound right at the bottom doesn't look that appealing. So let's take a look at some other Aussies now, like AUD USD indeed. Moses is saying that AUD USD is weakening, and indeed, target for the moment 77.50. We're getting pretty close to the target. Still a bit of space left. So AUD USD also looks bearish indeed if it hooks back to maybe 78 for downside down to 77.50. Let's put on the moving averages. And you can see we had earlier this morning already a breakout trade on the Aussie, and that setup is up 46 pips with probably some space left, right? So let's see. Moses has a pending order at 78.62. Yeah, we'll have to see if it gets there. For the moment, it looks like it's breaking actually. So the chances are slightly less than I would say a few hours ago for 78.62. I'd say let's keep an eye on this 4-hour candle again. If that closes decently bearish, I don't think we'll see 78.62. We probably just keep pushing to 77.50 first. But there's not a lot of space left to the downside, so I'll be cautious about that. Alrighty, let's take a look. We'll definitely take a look at the euro again, no problem. Quickly, the Kiwi. Good downtrend, as you can see, on the daily 4-hour, and we see that actually on the weekly it was bouncing at the long term, but now trying to break below it, so it could be breaking here on 1 hour, 2 downtrend, all downtrends here on these time frames. So that sometimes happens if you're trading moving averages. Price is already accelerated away from moving averages, and there's really nothing left on the QE except a pullback, perhaps a continuation. That's the only thing. But at least it serves as good examples for future. This is just a messy 1 hour chart. When I see something like that, obviously I don't want to trade it. It's just yuck. So no, the outsourcing doesn't look interesting. All right. Does anyone want to see the? I don't know. Let's see, what else do we have left? Oh, let's take a look at the Eurodollar. Does anyone have any preference for any currency pair? Just drop a chat in the box. Okay. Regarding the Eurodollar, I do expect 108.75 to be a bouncing spot. 108.80 because of the 61.8 fib and the minus 272 target when fibbing the weekly candle. When we fib the weekly candle from here to here, you can see that there's a confluence between those levels, the minus 272 target and the 61.8 fib, the minus 61.8 and the 78.6. So this is a potential long spot right now. But I personally wait for a 4 hour candle to either have a wick or close bearish. If it's a wick, or the next candle is engulfing signal for long. If it closes bearish, definitely no long. Potential short, but I still want to see a break below 108.75. If you like this level a lot, then you don't even have to wait for a 4 hour candle. These are already 7 candles, I think, on the 5-minute chart. Let's see. 2, 4, 8. This is the 9th. So we could be getting a bounce. Let's see. I think the 15-minute chart is probably a bit better. This is the 3rd candle only. So we need 5 to 6 candles, 5 to 7 candles, not breaking this bottom. And that could be the first indication that we can get some retracement or a bigger bounce. And then looking for a long here at that blue dot when we get failure to break the bottom could be kind of a sweet spot, because we have at least some time that price didn't continue with the downtrend, so that burst of momentum is a bit behind us, and we are at a very strong support level, so it also could be a pretty tight risk in terms of pips and a lot of potential to the upside, so that could be interesting. The only disadvantage is that it's quite early in the London session still. But it could be that could be the first clue that we're bouncing off 108.80. If you don't want to wait for 4 hour candle, but maybe too long, then that would be an alternative. I think indeed that's very true, Björn. I think personally I see this time as a good moment to reflect on potential trade plans and how things could develop today. But I like to just kind of like plan the day now, what we do together, and have ideas ready. But personally, I think I like the setups a bit later often more. I'm not saying that all setups are necessarily bad ones. I mean, today we had a good breakout trades that happened 2 hours ago. But especially around this time, indeed, between, let's say, 8 and 10 Central European time, or 8 to 11 indeed, It can sometimes be a bit of a difficult time frame indeed. Either before that, like this one was, when did this happen? This was, oh, it was an hour ago. Okay. Well, anyhow. No, this break, I mean. This break was 8 hours ago. That was an Asian session. Anyhow, I agree with you. I think that not all breaks are bad, but personally, I like to, like for instance, yeah, last week we had a momentum burst to the downside here. This one, I said wait for a pullback and the break, and you'll get that trade. And it was in the New York session indeed, somewhere here, I think. The euro dollar could very well range indeed. I totally agree with you. And make kind of a bear flag. And if it then breaks again below 108.75, that could be actually a trigger that it continues lower. Just because there is a bounce spot doesn't mean price has to really respond to that in a very big momentum. It could just go sideways. That's the problem. That's why I'd rather wait for the 4-hour chart than trading on the 15. Indeed. I agree. It's possible, but I would like the 15-minute chart a bit more if this would be the end of London already. So when looking at the 4-hour chart, the target for upside, well, let's see. Not an easy one because of the fact that price is making a pretty hefty momentum. Even if we get a relief rally, we could see one more downside here. Maybe if we fib for the entire downside, any of these fibs, like the 38.2 fib 111 or the 50 fib 111.75. But I think maybe even more important would be the target if we get, for instance, a 1-hour momentum like this. If it does happen, and we'll see it engulfing to another 4-hour chart, then one way is fibbing this first move up. We don't have it yet at this point. That could be the best information. And I'm looking for conservative target would be minus 61.8 target. So letting that momentum, show itself on the chart and then fibbing that. We can take a look. I realized we didn't look at the dollar CAD actually. We can do that still. Before I do that though, just want to make you aware of the fact that tonight there is the move at the webinar, educational webinar, four most critical errors done by the novice trader, but also actually the beginning trader, but also actually these are mistakes. I will be presenting mistakes that actually not only beginner traders tend to do, but sometimes even very experienced traders, ironically. So that's tonight, not on Thursday this time. So just wanted to let you know. Tonight, same time though. And then tomorrow morning, we're going to take a look at Forex strategy. All right, so I hope to see you later on today. Anyhow, back to the dollar CAD. Dollar is moving to the upside here as well. Very shallow fib bounce. Looks like a good breakout trade to the upside, but at the moment I think that the targets are too close, so I wouldn't be really trading the dollar cat at the moment. RDN maybe. Doesn't look that interesting. Let's see, break. Yes, I think the break of 108.75 would do that. I'm not sure if I would want to trade it right now. I would rather probably wait for a bit of a bear flag correction first, or wait for this 4-hour candle to close bearish. So it's something more for later today. It has to close bearish, this 4-hour candle, and then break the next break of that low. So until this 4-hour candle closes, basically, I have nothing to do on this Eurodollar. But if this closes bearish and then pushes through that low, this candle's low, then that sounds good to me. Or if we get a kind of a bear flag on a 15-minute chart, that sounds good to me too. Target, I would be aiming for 107.50, but it might be something that happens this week. For today, if you're looking for today's a target that could happen today, pivot points are not helping us. Let me 'try the intermediate targets here. $107.75 perhaps. Yeah, I mean 107.50 is I would say a target for this entire week. But today, how much price movement could you see to the left? There's already a 100 pip candle. That's not that bad. So I would think that if let's put a fib otherwise from here to here. Oh, target at 108. Let's see, 108.50 perhaps. That could be a today's target. 108.25. Right, but I mean, in a bigger picture, I would say 107.50. Not 108. Let's see. Sorry, 108. Not 108. If it breaks 108.75, I wouldn't aim for 108.50, obviously. Only if one catches a pullback here, like at 109.25, perhaps, right? Because then there's still enough space. 108.25, perhaps 50 pips is a bit on the tighter side if the risk is small enough. But it would be more a 4-hour trade, basically. if 108.75 is taken, with a stop loss above the 4-hour high, and just trail stopping each of these 4-hour candles, trying to trade basically the momentum and continue with that to the downside, and trail stop each candle high by 5 to 25 pips, depending on how spacious you want to be. So probably 107.50 is the main target still. From an intraday perspective, it would depend. Kind of, if you want to trade it from an intraday perspective, it would have to be as follows. It would have to be a bear flag here, like this. It would have to be a break of this bear flag, an entry around 108.80, so let's say, stop loss above this bear flag at 109, I don't know, 30 maybe, right? That's 40 pips. Or yes, let's say 40, 50 pips. And then the target at 108.25 would be about 55. So you got about 1-to-1, 1.5-to-1 trade there. That's why I meant with 108.25 as an intraday target. Because if you trade the bear flag like that, you could maybe get anywhere between a 30 and 50 pip stop loss, and anywhere between a 50 to 75 target. But if trading the 4-hour candles, then 107.50, I would say. If trading a bear flag, then, and wanting to close the day, perhaps 108.25. So let's see, it will be interesting today. Yesterday was slow, so I think today probably see a bit more action. This is a fourth candle moving to the downside, so perhaps we won't get the bear flag, I don't know. In any case, if that doesn't happen, I'll just still keep an eye on this 4-hour candle. And perhaps trade it that way if it does close bearish then. Yeah, it will be interesting. We are, how many days left? Oh, only this week, right? And then May is over, so Friday could be a bit tricky. And then we have another month candle, and if you look at the month candle, obviously it looks pretty bearish at the moment, but let's see how it ends. Same with the pound dollar. We had a bearish candle on weekly, monthly now looks like this. So it's going to be interesting. Alrighty, folks, thanks so much for joining. These were kind of my ideas for today. We can take a look tomorrow at how this trading day has completed, has finished. Thanks all for joining, and tomorrow I plan to take a look at lower time frames as well. So if you're interested in that, join us for the strategy session tomorrow at the same time. And then tonight we got a webinar at 6 p.m. Central European time with Netta. All right, see you soon. Cheers.